Good evening, traders. I hope we're all well. Another trade of the day video today. But first, I just want to talk about what an incredible week we've had. Nothing short of remarkable. We've just wrapped up a record-breaking week. The most pips we've ever pulled from the market, and without doubt, the biggest profit week I've personally had as well by about 100K. So, absolutely insane results. And we should all be extremely proud of ourselves. We should all begin to realize just the power of this system and hopefully trust it a little bit more for those of you that are new. So it's obviously coming off the back of a couple of more difficult weeks. We definitely felt that the last 2-3 weeks had been a bit tougher. The market wasn't as clean, setups were a bit slower, and it's required a lot more patience and a lot more sporadic action than usual. But ultimately, it all boils down to discipline, consistency, and trust in the system, as always. This is exactly what trading is about. And this system, week after week, always delivers. And it just didn't just deliver this week, it absolutely exploded. So I'm extremely proud of all of you that have stuck to the system, followed it, and just got on with it. That's very, very important that we do that. Every setup that we've had this week was shown pretty much in advance. They were clean structure, strong momentum, incredible entries all week. It was like everything just sort of clicked into place. And when that happens, you've got to be ready to execute, absolutely no hesitation. And that's why I always say that it's not me that decides whether we trade or not. It is this system. The biggest takeaway for me isn't the profit, though, right? It's this understanding of how the market moves, and that we need to understand that tough periods are always going to be temporary. The consistency will always pay off. And when you stick to a proven system, the weeks like this aren't luck, they're inevitable. And as you have been here long enough, this is, a record-breaking week for sure, but, 30,000-40,000 pips is not uncommon for us. So for those of you that have been grinding through those slower weeks, this is your sign that staying locked in is exactly what you need to do. We don't want to look left and right. We don't jump from strategy to strategy, because if you do, you miss massive weeks and massive results like this. Again, an absolutely insane week. So with that out of the way, let's have a look. Trader day, obviously, we've got quite a few. Sorry, just have a look. For some reason, the 1 minute. Here we go. Let's have a look at the 1 minute chart. Where's that gone? Right, let's have a look. These are our entries from this morning. Sorry, guys, just give me 2 seconds. Sorry. Excuse me, sorry. Yeah, so here are 3 main entries, absolutely insane entries today, right? I mean, beautiful leg all the way up. And again, it's the same system, right? Down, close candle, price trades above, comes to bang 50%. We mitigate, we trade. Again, it came back, swept liquidity, this little double bottom here, swept that into it. So we traded it again, and then we traded the mitigation of this down close candle. So insane moves. Again, the reason that price returns to these areas in all occasions is because the banks are in drawdown, right? They sold at this level to manipulate price to tap out their drawdown here. Then they trade above, and now price has to come back down in its cycle to take the sell positions out that they're in drawdown for this. And then, of course, when they take those positions out, they take the triple bottom, and then we buy in with them, obviously, for this over 1,000 pip move this was. But what I wanted to show you today is the higher time frame. Obviously, we're still holding in buys from down here, buys from down here, buys from down here. So I wanted to show you on the 15-minute why I was absolutely certain. Let's get rid of this. That price was trading up to where we are today. So if I use the market sessions indicator, this is just really nice to mark out all the highs and lows. Now, as you can see, we've got Tokyo high here, London, New York high, Tokyo, I say Asia high, all around this area, right? So we've got triple top liquidity with session highs here, and we've had the opposing side of liquidity, London, Tokyo, New York, London, all of this has been swept. So all of the lows of those opposing sessions have been taken, but we've still got London, New York high and Asia high here. Now, that's great. That's a huge draw on price for us, but what's an even bigger draw on price believe it or not, is this section here that I've highlighted. Now, the reason why I was 99% sure that price would move from this point to this point is because that this is an institutional down close on the 15-minute. Now, yes, it has been mitigated, but what the banks have done all week, they've been engineering liquidity and taking it. So we've got this engineered liquidity here. So we've got lots of buyers along here. They've swept those buyers out. And then it's come in and it's swept into to remove more of their sell positions that are in the market, because this is where their price will go to, because we know that banks are in drawdown at this level because this is a down close candle. And when it does that, we align ourselves. Now, the hesitation is zero for us, right? We've got a little double bottom just here. So we've got buyers stepping into the market at this level. And then what has happened is the banks have allowed them to get in because they've created this area. This is not an area where buyers and sellers are fighting for control. This is not an area where it's a strong level of support or any of that nonsense. It's not a magical black line that's going to hold just for the sake of holding. It's engineered by the banks to encourage you into the market to buy. And as you can see, what the banks then did is they swept all of that liquidity to take the money. Below this level, we also have we have retail trading sellers, the breakout sellers, that then have their sell stops activated, and then they get their stop losses taken as well. So again, we know this is institutional money because it's swept these lows, and therefore this is where we buy from, again, the 50%. Now, for me, TP1 on this trade was the top of this larger down close candle. So TP1 on this trade for me was 1,200 pips. And then my extended target, sorry, I don't know what's just happened there. My extended target on this trade was obviously the open of this box here, because this is an institutional up close candle. So this means that the banks are in drawdown on their buy positions. And we also have a relative equal high liquidity here. So there's money sat at this level, stop losses from these sellers. So price will also be magnetized and drawn to that area. But this is where this setup is just going to blow your mind. Where do you think that price came all the way to and then reacted by 600 pips to the pip? Now, I go on about the power of this system over and over and again, and it still blows my mind how we can be so precise. Just look at this. 50% is this gray line. Look at that. To the pip. Nothing in the market is random. And when you start looking at the market through an institutional lens, you cannot unsee it. So for us, this trade here was a long from the 50% all the way up to the 50%, because that's the highest probability after we've taken initial partial profits. And as you can see on this trade, we got 51. So our stop loss would have been 47. As you can see, we've got a 43.3 risk to reward trade on this one. Again, 1,200 pips is the TP1, which is London, New York high, which is the top of a large 1 hour down close candle. So that's TP1, and then TP2 extended targets were up here at the up close candle. This is, again, exactly why price is moving. We don't care about the noise. We don't care about trend lines. That's our liquidity. That's our TPs. Now, it isn't going to just take every trend line, because otherwise sellers would never and buyers would never sell from these areas, right? That's why we do get respected of double tops and trend lines along here, but we do not trade them. Whilst that can be frustrating for some of you, all we have to do is stick to the plan, and this is what we get for that. We get gifted opportunities like no other group out there. No one is delivering the results consistently day in, day out, week in, week out, month in, month out, like we do. And the way that we do that is just reliant on the system. We do not decide personally. I do not decide personally to trade or not. What we do is we trust the system. Does the setup come into an area where we're interested? Does the setup meet the criteria? Does the setup have a target of liquidity? Does the setup have a draw on price? If the answer to all of those questions is yes, then without fear, without fear of execution, we take the trade. And again, I mean, it doesn't really get any better than that. Look, from the 50% straight to the 50% of the up close, you cannot argue that the power of this system is just unchallenged. Look at that. Unbelievable stuff. So again, another fantastic end to a fantastic week. what did we do in pips? I can't even remember. 56,000 pips, 92 trades, 4 stop losses, 54 TP3s, 233 runners. Just mind-blowing stuff. Really is mind-blowing stuff. And again, guys, it's nothing to do with me, really. I've just learned to decrypt the information in front of me. I've learned the language of price action, because that's essentially what it is. And it isn't me that decides to trade, it's the system. When you start to look at that and you understand that, you will start seeing trading as a skill rather than just about money. And when you flip your mindset from focusing on the setup and focusing on what the charts are telling us rather than the money, it's going to transform the way you look at the markets. I promise you that. That's all for me tonight, everyone. Take care, and I'll catch you in next week's session.